Hello, clients and friends. I hope that this video finds you well. My name is Blaine Anderson, the Chief Investment Officer here with Bander Wealth Management. I wanted to take a couple of minutes and respond to a question that has come up quite a bit of late with clients, and it has to relate with the housing market. So this video is intended to provide an advisory market commentary in relation to real estate here throughout the United States. This video is being recorded in September of 2023, and my objective is to provide a closer look at the current housing market. I'd like to share my screen with you, and I'm going to go through some of the headlines, some of the things that you may be seeing on your end. This here is what a lot of the headlines you may be seeing, and maybe part of the reason why we've received some of the questions that we have. Is the housing market going to crash? What experts say about the possibility in late 2023? This is an article that was released not too long ago in the USA Today, and is much of what we may be hearing in the news media. Housing prices are up big, mortgage rates are up big. This will cause a collapse in the housing market. In today's video, we'd like to look at the actual data. We'll strip out the noise and distress from the news media, and we'll take a look to see what is actually happening in the housing market. Housing prices are up significantly from the early 2020 levels, while mortgage rates are now hovering near 7.5%, the highest in more than 2 decades. Does this mean we should brace for another 2000s-esque housing crisis? Well, the economists at First Trust don't think so. In an effort to dive deeper into this and to also help illustrate, I'd like to review 3 charts with you to provide a more detailed picture of the current housing environment. In short, we see no collapse looming. Now, this is one of the reasons for it. As of the first quarter of 2023, a striking 95.2% of outstanding mortgages are fixed rate loans, leaving a mere 4.8% comprising adjustable rate mortgages, or ARMs. Many homeowners purchased or refinanced their homes at much lower interest rates prior to 2022. This has created something called a mortgage lock-in, whereby existing homeowners are reluctant to sell because they would need to replace their really low mortgage with a rate that's much higher in today and now. The average interest rate across all mortgages currently stands at a relatively low 3.7%. Now, one other thing that I wanted to share with you has to do with the housing supply. Here, this graph illustrates what it looks like, and maybe it's something that you've seen or experienced. This distinction between our current housing market situation and the early 2000s is the lack of an available housing supply. This shortage of inventory is primarily attributed to the lack of sellers entering the market because of the so-called mortgage lock-in that I just mentioned earlier. And even though demand has dropped significantly with the rise in interest rates, the supply of available housing remains close to rock bottom levels, meaning supply and demand are not necessarily out of whack. So that is one thing. And then the last item that I wanted to share with you is in relation to homeowners' equity. Allow me to place this on our screen as well. This rapid appreciation in home values over the past few years, combined with larger down payments and the sustained strength of the housing market throughout the past decade, has resulted in a remarkable milestone. Homeowners' equity as a share of their overall home asset values has now reached an impressive 71.1%. This is the highest recorded since 1960. So, to wrap up today's video, let's review the 3 points that I mentioned earlier. Yes, housing prices and mortgage rates are up significantly. but supply and demand remain in balance. And homeowners' equity is the highest it's been since 1960. The team of economists who track the movements in the housing market do not believe that a collapse in the housing market is on the horizon. I hope that you found this update on the housing market insightful. Please check out our weekly newsletter, our social media page, or our website for other real-time updates. Thank you for joining us today. And as always, please feel free to reach out to me or your team here at Vanderwealth Management with any questions you may have. Thank you.